Let's Get Down to Business is presented by Bravo, the marketing arm of Ash Brokerage Corporation, the practice enhancement company. All this week, it's our series on life insurance audits. And on today's show, our introduction into the due care process. And with me is CPA Richard Newman. Hi everyone, I'm Steve Savant, syndicated financial columnist and contributing author to Backroom Technician. Let's get down to business. Well, welcome to the show, Richard.
Thank you, Steve. Welcome.
Well, I have to say, I'm looking at your bio, and I'm seeing letters here that I have to say, I've been in 30 years, and I keep thinking I know what I'm doing. Talk to me. We all know what a CPA is, certified financial, certified public accountant. But talk to me a little bit about this PFS, AEP, and then your big one, which I think is huge now, the CAP. Talk a little bit about. Let's do the PFS first.
The PFS is like a financial planner. It's just a designation that the AICPA, the American Institute of Certified Public Accountants, has created.
It's their version of CPA.
CFP. It's their version of CFP. I just don't think they've done a heck of a good job marketing it. Of course, they're CPAs, so it's hard to get them to market much. Accredited estate planner is something I've had for many years. Most of my work is in the estate planning field and the legacy field, and that's a designation I got many years ago as I got into the life insurance area from practicing accounting. I love the designation. It's credibility what we do. But I think most of the experience that I've gotten is in the real world there on the estate planning end.
I haven't seen too many have the AEP, and a lot of people, of course, as you and I know, many advisors are in the estate market. So Absolutely. I'm a little surprised that isn't more, you don't see it as frequently.
Well, I know a lot of advisors, many advisors say they're in the estate marketplace. Getting down to business, understanding who you're doing business with, and have they truly gone and done that type of work. I can tell you today, I've been in the life insurance area almost 23 years after practicing accounting for 23, 24 before that. Most of my expertise comes from having done it a couple of times before and seeing what's working and what doesn't work. So while the accredited estate planning designation is important, doing it for the last 23, 24 years has, I think, been a heck of a lot more important.
We'll talk about the last one, the CAP, because that's relatively new. And we've done some of this on another interview. We talked a little bit about this. It's
probably the most important designation I have. I received it a couple of years ago through the American College. A gentleman by the name of Phil Cabetta is a gentleman who created the designation, my understanding, through the American College. It's called the Chartered Advisor in Philanthropy. But it's taught a heck of a lot differently, at least when I took the class, than any other class I was able to take. This was taught with 25 very high-end professionals in the South Florida area. Attorneys, many of which are board certified or ACTEC attorneys, CPAs, very high-end CPAs, wealth advisors from the major houses, but the real high-end houses, charity people and insurance people getting together every other Tuesday for about a year and a half, where much of us was just putting on the table what we've done with our clients and what we've seen, what's worked, what hasn't worked. Everybody at that table could tell you all the different tactics as to what to do. But what really came out of that is none of us went to college and got a bedside manner class. It just wasn't there. And our job, especially at the estate area, regardless of what discipline you work in, whether it's law, accounting, finance, insurance, is we're in a legacy business. And the only way we can truly determine what our clients' legacies are going to be is if we help them achieve those and understand understanding the right questions to ask, understanding how to be able to get in your client's mind, not to make a sale, but to give them what they want. And most people don't really understand what that is. It's all about taxes. It's all about finances. It's not always about the money. The scorecard is created from a monetary standpoint, but what's that true legacy that somebody's going to leave? And that's what CAP really was about. When
I'm looking at these credentials, and I'm thinking, wow, okay, you have a high-end credentialed resume, and you came into life insurance, and now you're into life insurance audit, policy audits, and I mean, you're into it big time. Well, throughout the week, we're going to address this. Richard's got some great material, especially at the end of the Friday. We're going to talk about his practice, his materials, all these things that are really he's using in his practice. Why did you do this? Because this is like you almost coming to the dark side. You know, the CPA leaves the fiduciary market and comes over to the financial services.
That's not the first time I've heard moving to the dark side. That's definitely not the first time, Steve. In my accounting practice, I had quite a few insurance investment advisors who were very good marketers that marched to the beat a little bit different drummer than I did. And I realized that if I could take, because none of these folks were technically competent, they were great salespeople. I said if I could take some of the technical expertise that I developed practicing accounting and marry it with the financial services world, I think we could do a heck of a lot better. And I will tell you, other than my CPA, Steve, the PFS, the AEP, and the CAP, those all were obtained in my years in the life insurance business, not in my years in the accounting business. I realized in this business that I had to develop a sense of understanding, and that's by education. And you know, it's very interesting in the life insurance industry. I know the perspective is that it's not a highly educated type of a field. To do really well at this field, to do really well for your clients. Our focus in our firm, and me specifically, is to educate and to become educated. And everybody in my organization is required to get far beyond the minimum required education that we're required to take just to maintain our life insurance licenses. So I believe that the empathy gained over all the years of being in this industry and the commitment to education, which I guess the scorecard is my credentials, allows us to place ourselves in a significantly different place as it relates to our clients and their professionals.
Well, I have to say, you're an anomaly. You're in our business, and you are giving some of the greatest accounting tactics in reviewing life insurance that I've seen in my 30 years. When we come back from the break, we're going to continue addressing the life insurance product review process as part of your overall business strategy that can position your practice as the premier provider of product information. Hey, not only to the fiduciary market, but also to prospecting tactic for new clients in your community. Don't forget, you can request your own life insurance audit on your own clients. Just go out to downtobusiness.ashbrokerage.com and fill it out, and we'll go ahead and send it back to you. And remember, while you're out there, you can sign up for your own 30-day free trial offer to Backroom Technician. Just go out to brtnow.com/trialsignup.aspx. We'll be right back after the break. Back in the day, life insurance professionals were called field underwriters. Then, carriers trained their field force in the basics of life insurance underwriting. Today, the insurance industry doesn't educate the agent population as they once did. But now you can have the Informed Risk Guide at your fingertips so you can illustrate a reasonable rate class for your life insurance prospects. Just request your copy of the Informed Risk Guide at downtobusiness.ashbrokerage.com. It's free from Ash Brokerage, the practice enhancement company. Well, welcome back. I'm Steve Savant with Richard Newman. And remember, you can watch all our episodes of Let's Get Down to Business, including my weekly consumer show, Steve Savant's Money, the name of the game, right out at ashbrokerage.com. Just click on the show logo. It'll take you right out to the homepage. Just a heads up, before moving forward with any of the ideas on our show, always consult your tax advisor or legal counsel, as well as your broker-dealer compliance department. Well, let's get down to business. We're addressing the life insurance product review as part of your overall business strategy. And this can position you as a premier provider of product, because not many people do this, Richard. So we're talking about something that you're introducing. It's really, you've adopted it into your practice. This whole life insurance audit, you've applied accounting to it. And really, this merger or this marriage, you said both of them together, really has come out with a huge product. And people, I don't understand it. I thought we were supposed to be trained early on to do product reviews, and nobody does it.
You know, it's amazing.
It's amazing.
Just getting back to basics. I mean, we haven't just embraced it, Steve. My name, my company is called Life Audit Professionals. Our two processes are my life audit works in the non-philanthropic area, and my life giving, which works in the philanthropic area. But what I really try to do is position this to CPAs and attorneys from the standpoint, is it my responsibility to talk about life insurance with my clients? And the first thing I ask somebody is an asset, especially a professional advisor, a CPA, a wealth advisor, an attorney, is, let me ask you a question. What can happen to an asset when you die? It can do one of three things. It can go up in value, you can go down in value, you can have the same value. If somebody owns a bank account at today's interest rates, the day after you die, no matter how much money is in there, it's worth virtually what it was the day before you died. If you're the key person in your business and you died without a plan, that business is significantly impaired. What other asset explodes in value other than life insurance the day you die? And nobody's looking at it. Nobody's looking at it. So I explained to them from that standpoint that you have an obligation here, knowing how the insurance industry has been created, and it's not always in the best interest of the consumer. Many times the products have been developed for the best interest of the agent. And in this circumstance, or they're not being properly monitored, knowing that somewhere around 70% of existing product that's on the marketplace has some sort of problem. Let's use accounting terms, a defalcation. There's some issue within the product. It could be owned incorrectly. The beneficiary could be incorrect. How would you like to be sitting with your client's widow and you found out that he forgot to change the beneficiary from his ex-wife to his new wife? I don't know if you'd maintain that client after that without asking that question. I know you'd, at a bare minimum, you'd feel terrible knowing what was supposed to take place, but nobody prompted that discussion. The life insurance agent was nowhere to be found. The lawyer, when he got divorced, didn't tell him, Steve, by the way, call the company and change the beneficiary. And your inaction is going to allow that money to go elsewhere and where it's not intended to go. You know, but what I also discuss, Steve, is people ask me, is it really my job? And I tell the story about my friend Jay in New York. And my friend Jay in New York is a CPA. He also does wealth management. We do all of his life insurance. And Jay said it was his job. Jay introduced me to 2 doctor clients. When I met them, the wife was pregnant with the first child. They bought a boatload of term life insurance from me, based on some of our other questions we've discussed over the days. The wife decided not to go back to work. She decided to have another child. They had their second child. And 3 months after they had the second child, the husband was in the subway coming home from work and had a massive heart attack and died. Now,
And this is a young man.
a 43-year-old
Yeah,
man.
that's young.
43-year-old man. Now you tell me, who was the person that told him to buy life insurance? It wasn't a life insurance person because he was not talked to by anybody. It wasn't his lawyer when he did his will. It was his CPA who said, you need to buy some life insurance. Well, you have all the capabilities of the world. Your wife, if something happened to you or vice versa, could go get a job and could be paid handsomely. But do you want to be like I was when my father died? My mom, when I was 15, had to go back to work. I used to come home and I'd see my mom and the milk and cookies were there. She wasn't there when I came home when my father died. She had to go to work. The question is, do you want those 2 little kids to get up in the same room that they got up in the day before Dad died? Do you want them to have the same family, the same friends, the same schools, the same beds, not having to share a room? Do you want them to lose their mom? Bottom line, she could go out and make money. She's a highly skilled physician. But is that where she wants to be? She'll probably go back to work, but when she wants to and when she can, not because she has to. So I absolutely believe what we're really bringing to the CPA is, yes, this is an asset class financially that must be monitored. On the other, I'm bringing to the CPA, the legal world, this is an asset that you need to look at. You need to bring this up, because I believe as a CPA, especially to that young person still beginning to mature financially, the only person he sees every year is a CPA. He doesn't see everybody every year. He needs that person to be the quarterback of their financial team, which includes mitigating risk, whether it's property and casualty, homeowners, medical insurance, life insurance, disability insurance. They're developing through life, and those kids, you know, I love Joe Jordan, who we both know, and Joe says who he talks for. He talks for the wife who's intimidated by the husband. He talks for the 6-month-old baby who can't say, Dad, protect me.
That's the reason why we're on this show today, and the surprise is I have a CPA talking like this. That's the anomaly having you on our show, Richard.
Thank you,
That's our
Steve.
show for today. Don't forget, you can read all my online insurance news commentary, advisor blogs, and articles on Producer's Web, as well as my answers to consumer questions on the Insurance Library. And remember, you can view any of our past episodes on our on-demand section located at downtobusiness.ashbrokerage.com. So follow me on Twitter, Facebook, LinkedIn, or just email me, steve.savant@ashbrokerage.com. And remember, you could be wiser as an Ash Brokerage advisor. We'll see you tomorrow.